morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah. You're watching Indian Open. Let's go straight to the headlines. Consumer price inflation rises a 4-month high in May. Industrial output growth rises to 4.9% for the month of April. The U.S. Federal Reserve is expected to hike rates by 25 basis points later tonight. The U.S. FDA clears Sun Pharma's Halol plant nearly 4 years after the pharma watchdog first made observations on the facility. And Ruchi Soya's lenders select Adani Wilmar as the highest bidder before kicking off the Swiss auctioning process. Well, let's take a look at the trade setup for the day. The world markets seem to be slightly muted. Remember, that was the case yesterday as well. Europe was very flat to marginally in the red. Dow futures, when we shut shop, were marginally in the red. And Asia is painting a mixed bag as well. So it's been a flattish day for most world markets. Some of them actually down about 0.5%. The SGX Nifty is indicating about 0.25% kind of a downtake. So we'll start off maybe flattish to marginally negative. That's okay. In yesterday's trade, the positive sign was that heavyweights were contributing to the move. The likes of State Bank of India, Reliance Industries, select IT names, all of them were doing reasonably okay. Reliance, in fact, ended at fresh closing highs or record highs for itself. So there was contribution from all heavyweights, which was very, very interesting. Cash market volumes, though, for the first couple of days this week that we've seen, continue to remain very, very tepid. Options activity, too, actually has come off this week and come off quite rapidly as well. From what we saw in Friday's session and Thursday's session to what's happened for the first couple of days of the week, options activity is slightly muted. What is not muted, though, is the FI selling. The last 2 days, over 1,000 crores each of the days. So this week has been much higher compared to the average that we've seen in the month of June. What we saw yesterday, though, come out was the macro data post-market hours. May CPI numbers at 4.87 versus 4.58. I won't dwell too much upon it. April IP2 at about 4.9 versus 4.4, slightly below what the estimates were, but showing a bit of an uptick. Just a couple of points from mine, and I'm sure we'll get in ERA a bit later on, but core inflation growth was disconcerting. Overall CPI uptick, though, was in line with estimates. And as far as the IP goes, there was muted growth in the primary goods and the consumer durables, which probably kept the IP in check, else maybe the numbers could have been better. But we all know the story. Consumer durables have been having an iffy time the last couple of months. What to watch in today's session? I think all eyes out on the Fed. There is nothing else beyond that the street will be watching out for, even though 25 basis points is priced in. I think the comments about the stimulus and the impact on growth post 2020 would be something that everybody else would be watching out for. So that's really the key thing. Beyond that, maybe the dot plot, and we'll get to talk to an expert about it. I think that's about it. However, all of that is a bit later on in the show. What will happen at 9:15 a.m.? Well, the markets will start off slightly muted note, but there are a bunch of stocks that could react today. So Sun Pharma, they've received the established inspection report of the EIR from the U.S. FDA for the Halol facility. Should be positive. Whether it is priced in or no, we'll talk to Darshan about it on first word. TCS will consider the buyback on 15th June, which is the AGM date. Should be interesting. The stock was fairly active in trade yesterday as well. Page Industries, I'm interested in seeing if there's a big reaction or if there is a reaction in the first place, but the license pact with Jockey extended until December 2040. I don't think Jockey would have found a better partner. I don't think Page would have done without Jockey. So such a scare had come about once in the past and the stock had corrected. No such scare now. Extended till December 2040, which is a long lease really. So should augur well for the stock. And bunch of brokerage notes. I've just picked up one. Macquarie on KC International. They've initiated with outperformance a target price of 454, essentially calling it the prey on the railway electrification opportunity in India now. Let's wait and watch if KC International reacts further. Was a big mover in trade yesterday, and hence I thought we should highlight it in the stocks to watch today. However, it's a packed first word, a lot of important stories. Today on the first word, we'll talk about a rate hike and the fact that it's a given. The U.S. Federal Reserve may just moderate its tone on future policy decisions. So the dot plot would be important. Kathleen Hayes explains how and why. Back home, the consumer prices continue to inch closer to the central bank's higher end of the trajectory, and industrial production also shows an uptick. ERA will weigh in on that. Sun Pharma is all clear from the U.S. Pharma watchdog for its Halol plant. Is just one of the many factors that have aided large-cap pharma stocks this year. And Goldman Sachs clients have drawn up a dream team before the FIFA World Cup kicks off. We'll tell you who is on that team. The rate hike by the U.S. Federal Reserve is almost a given today, but economists polled by Bloomberg differ on the pace of hikes in the coming months. The dot plot. Remember, the Fed will be rebalancing or balancing inflation that's accelerated to its fastest pace in more than 6 years, and wage gains that remain relatively tepid. Let's get in Kathleen Hayes first of Bloomberg News, who summarizes the expectations from today's FOMC meet.
Are they going to push over that evenly divided 6 versus 6, saying 3 hikes or 4 hikes in total this year? Are the hawks going to carry the day, saying, we got to be prudent and move ahead before inflation rises? Or are the cautious doves going to say, no, you're going to be too restrictive, too fast, and mess things up? But I just want to put up several charts, our GTV library charts. The first one is looking at GDP growth versus core PCE, and I think it just simply states kind of the broad picture. You've got the latest reading of first quarter GDP up to 2.8%, but you still have the core PCE down around 1.8. This is supposed to move higher. Will this move higher as well? That's one of the things the Fed is considering. And of course, the problem is the economy's stronger, but wages aren't rising. So let's look at this one. We're going to look at this one. Unemployment versus wage growth. Unemployment down to 3.8%. Wage growth, average hourly earnings stuck are in this like 2.6 to 2.7% range. So bottom line, I think the tiebreaker is the Fed wants to make sure inflation gets a sustained 2%. I think that's the argument led by Jay Powell that may lead win the day for no change in the outlook. 3 hikes total this year.
Well, what does this rate hike mean for markets? Cliff Tant, he's East Asian head of global markets research at MUFG Bank, joins us right now on the phone line from Hong Kong. Good having you, Cliff. Thanks so much for joining in. The rate hike is a given. What would the key takeaway be if the commentary is, or the dot plot is a lot more easy than what markets are anticipating?
Well, obviously, if that happens, and by the way, it's good to be here as well. If the dot plot ends up being more dovish, that would be a big surprise, I think, to markets. If anything, we're probably expecting the dot plot to show a bit more of a lean towards tightening for this year. Mm-hmm. And the big question is 2019.
It is. But okay, so in which case, if indeed your assumption turns out to be true, which is it's a lot more stiff than what maybe the markets are going in for, do you think there is a big dramatic impact on the markets?
There may be, because I think if the committee this time, as they're likely to do, upwardly revises its growth and inflation forecast for the U.S. over the next 2.5 years. I think that's partly priced in the markets, but probably not completely. I think some people will still be surprised if both the growth forecast and the inflation forecast go up.
Interesting. Cliff, a lot of people are believing, I was just reading through what various reports have to say, and amongst the questions that the Fed governor will have to answer, top of the mind of everybody is this stimulus coming at the fag end of the pullback that is happening, and the impact that it could have on the economy and inflation, if not now, then maybe post-2020. What are your views on the same? And what would you want to hear from the Fed when it comes to this stimulus of sorts that has been given out to the U.S. companies?
Yeah, I mean, I agree with former Chairman Bernanke when he says that the timing of the stimulus, and in fact, I think even the necessity of it is awkward for the Fed. I mean, so basically the idea is that, we get a 0.5 to 3/4 of a percentage point or more growth coming from the stimulus, and then everything just sort of drops off. Or as Bernanke said, Wile E. Coyote runs off the cliff. It's awkward because, the Fed right now is being blamed for things like, tighter money markets and so on, whereas, the blame might actually be more on the fiscal side as the fiscal deficit expands in response to the stimulus. So it makes it difficult, for them to continue this program of rate hikes. I mean, they're the staff's idea, I think, and also Chairman Powell's idea is that the economy is going really well. And so when the economy is going really well, why wouldn't you sort of normalize policy just as soon as you can? That's still sort of my bedrock belief for this year. But then you have all these other things that are not controlled by the Fed sort of interfering with this freedom to pursue policy.
Interesting thoughts. Cliff Tan, many thanks for joining us with that quick perspective. Really appreciate your time.
Sure, no problem.
All right, that's the view from Cliff Tan of MUFG Bank on what the expectation. He believes that maybe, just maybe, the Fed might indicate towards a slightly stiff dot plot and more tightening than what the markets are anticipating. That may just have an impact on the markets. The markets are probably, according to him, not bracing for that. Well, that's one macro data point that we'll be all watching out for tonight. Back home in India, post-market hours yesterday, inflationary pressures rose as feared by the Monetary Policy Committee. A week after the RBI hiked rates by 25 basis points, consumer price inflation rose to a 4-month high in May. Industrial output growth, on the other hand, rose only marginally in April. Ira Duggal sums up all the macro data in this report.
The monthly economic data has thrown up no surprises, both on inflation and on the industrial growth front. In a month where we've seen the first rate hike in nearly 4 years, perhaps we should start with the inflation picture. The consumer price inflation index came in at 4.87% compared to 4.58% in April. This 4.87% is more or less what Bloomberg forecast had suggested. It's also in line with the RBI's own forecast. They are expecting inflation to stay close to 4.8 to 4.9% in the first half of the year. So this index level seems to suggest that it's going as per plan. Let's talk a little bit about core inflation, though, and the core inflation, which economists are now watching, which strips out not just volatile food and energy, but also items like transportation, which get impacted by some of those volatile energy prices. If you take that core inflation, that continues to be elevated at 6.17% based on the calculations of India Ratings. So essentially, it is telling you that there is some sort of underlying inflation pressure that is building up, even though you haven't seen dramatic strength in growth, and we'll get to that in a minute. If you're looking at the internals of the inflation number, within the food category, there is relatively elevated inflation in the fruit side and on vegetables. Fruit inflation at about 12%, vegetable inflation at about 8%. Some amount of it could be linked to summer impact. There have been some supply disruptions as well, which could continue to play a part in the May and in the June numbers. On the flip side, you continue to see deflationary pressures in the pulses segment and also in sugar, where prices are slipping right now. Fuel and light inflation at about 5.8%. That, of course, moves in line with what's been happening globally on crude oil prices. So that's broadly the inflation picture, not throwing up anything that makes you question what the MPC did, which is raise rates by 25 basis points. If you move to the industrial output numbers, not very strong, 4.9% industrial growth in the month of April. Within that, mining saw about 5%, manufacturing about 5%, and electricity was weak at about 2% growth. Fairly comsa in terms of the number of industries that grew and the ones that degrew. 16 out of 23 industries in the manufacturing segment showed a positive growth. The good news is that whole capital goods, capex story seems to be consistent with the data releases. So you've seen 13% growth in capital goods. You've seen 7.5% growth in the infrastructure construction category. So that's good news. If you're looking at the consumption side, consumer durable growth was at 4.3% and non-durable growth was at about 7% or so. Just mentioning two individual industries which have shown one very positive growth and one negative. One is the commercial vehicle sector, which saw more than 90% growth in this month. I don't know if there's a base effect built in. There probably is, but it is, again, consistent with the fact that there is activity happening in mining. There is activity happening in terms of some slight capex, all of which would mean strong demand for commercial vehicles. And then on the flip side, you've seen sharp degrowth in the jewelry segment, and a lot of people continue to blame that on what happened with the Nirav Modi episode and the impact that has had on the gems and jewelry segment.
Okay, that's the sum and substance of what happened in the macro data yesterday. Now to the stock-specific news. In the much-awaited relief for Sun Pharma, the U.S. drug regulator has given an all-clear for its facility in Halol. This could pave the way for fresh approvals for its product in its largest market. Darshan, as usual, joins us with a brief timeline of the Halol plant's tryst with the FDA and what this clearance means for Sun Pharma. Darshan?
Yeah, okay, so first we'll start with what happened with the Halol plant. So way back in 2014 is where the U.S. FDA first inspected the Halol plant. They got in 23 observations, and this was in September 2014. So that was a big amount of observations, a lot of problems that, and there is where trouble started for Sun Pharma. After this came the warning letter year in 2015, and which the warning letter had 6 observations. So out of these 23 observations, 6 were critical, which the US FDA said, okay, this is the warning letter, and you cannot export anything out of this plant. You can export only what is there. The new approvals will not come in. Then again, the US FDA re-inspected the Halol plant in December 2016. Here they got 9 observations post the re-inspection, post which all remediation was done. Again, in 2017 and 2018, into February 2018, Sun Pharma's Halol plant was again re-inspected, and this time around only 3 observations came in, which the street believed that could be easily taken care of. Now in 6th June, what happened a couple of days ago was the US FDA gave the voluntary action initiated status to the Sun Pharma, which made it very clear that this plant is going to get cleared. And yesterday, finally on paper, it's come that the EIR has come for the Sun Pharma's Halol plant, which means very, very soon the warning letter will be lifted. New approvals will start coming in from Sun Pharma's new plant. How is this important? At one point of time, Halol was the most important plant, but now the revenue contribution is 11% to US sales and 4% to the total sales. But a lot of injectable filing, a lot of future filings are from this plant. So when the management post the fourth quarter conference call said that they believe that in the second half Halol resolution will come in, and they see a low double-digit growth come in, they had factored in the Halol resolution. And post the VAI also, you saw the stock has not moved more than 10 rupees. So pretty much most of the analysts are factoring in that this has been priced in. The future growth for Sun Pharma will come in only on performance of their specialty products and what they try to ramp up from the Halol facility. So that is the case with Sun Pharma. Probably it will have a rally today, given the fact that it's finally come on paper. How much will it rally? I don't know. But another interesting part is Spark. You want to say something?
Yeah, I just had a small question. So while it was baked in the guidance that Sun Pharma gave, could there be chances for some upsides to this?
Yeah, they could be, because the management had said that they expected to come in the second half. It's already come in the first half of the year. Post the VAI, everyone said it was factored in, and post the VAI, that 8% move. Sun Pharma's moved just 10 rupees. It hasn't moved. So it's pretty much reiterating the fact that, this plant is cleared. Okay. Obviously, sentimentally the stock will move today. How much it will move, I don't know. Spark, I want to specially point out, for the past few years, because of Sun Pharma's Halol issue, Spark is getting affected, because 2 of their key products, Zelpros and Elepsia, they will be manufactured by Sun Pharma at the Halol plant. Now, since this plant was under problem, they could not manufacture it. So despite having the US FDA approval, Spark couldn't generate revenues. That probably will change for Spark.
So bigger thing for Spark.
Yeah, bigger thing for Spark. Spark also reacted that day, but revenue wise, it won't affect Sun Pharma as much as it will affect Spark now. So Spark will start getting revenues now.
Okay. So watch out for Sun Pharma and Sun Pharma Advanced Research as well. Don't know if it will react too much or no. Some part of a reaction already happened. But hey, good news is good news, and you got to recognize that. And maybe the markets are recognizing what's happening in pharma, because the stocks in general have been showing signs of a revival over the past few sessions. But well, still remain far from their peaks. So Darshan, the question to ask after what's happened in Sun Pharma and some of the others is whether this is just a relief rally or it is more meaningful in nature.
Yeah, so basically post the EIR that came yesterday, the rally might continue. Now what we've seen is that the Nifty Pharma index is up 13% from the recent lows, and in recent we mean on a YTD basis, whichever is the lowest point here, and they're still down 37% from the all-time high. So there is still a lot of way for the Indian pharma to go before actually there is something meaningful that happens. The correction has been very, very steep. If you look at what's happened in the past 5 days also, the rally started significantly on June 6th, and then it started moving on. June 8th is the 4% rally that came in when the VAI was finally declared. It came on the side pretty much around this level. Here is when people started realizing the VAI has happened, and the rally continued for the Nifty Pharma index. So this is what has happened in the past 5 days, and this is where only the rallies happened. But because apart from this, it's been rather lackluster, and volumes have been generated only in the last 3 trading sessions. Now, if you look at what the prices are, look at Sun Pharma, and everything's moved on only on the basis of Sun Pharma, and the Nifty index, Sun Pharma has the largest weightage. So Sun Pharma is up 25% from the recent lows, but it's still 55% down from the all-time high. Similar is the case with Lupin, which still is under regulatory issues. It is up 20%, but still down 60% from the recent highs. Most of the counters in the large cap space, these are the 6 listed large cap companies, which have moved anywhere between 12% to 25%, but the drop from the highs is anywhere between 25% to 60%. So that's the case. It's even worse for the mid cap space, wherein the fall for some of them has been very, very sharp also. So on an average, 50% is the fall that we've seen. No doubt Glenmark, Granules, Ajanta, Torrent, all of them have reacted recently, not as much as Sun Pharma, but look at where they are. They're almost 50 to 50% lower from where they were initially. The other mid caps also, look at something like a Wockhardt, which is down 60%, Strides, which has moved 10%, but it's still down 75% from its all-time high. So pretty much this shows that it's mainly a relief rally that's come in. Still a long way to go for the mid cap and for the mid cap pharma space and the large cap. What has bucked the trend, and look at the move in the MNC pharma. We had once done a piece a couple of months ago indicating that MNC pharmas are the way where money is moving in. Look at the move that's coming. Merck is up 93% from recent low. AstraZeneca is up 50%. GSK is up 35%. Pfizer is up 32%. And the gap, apart from an AstraZeneca which is down 50% and probably a GSK which is down 30%, the gap is narrowing down. So if you're looking at Merck, it is just 5% away from its all-time high. Pfizer is just 3% away from its all-time high, and Abbott is just 12% from its all-time high. So clearly MNC pharma is the way to go, and where money has actually been made compared to the large cap. So the catch-up in the MNC pharma has been much faster. The catch-up probably in the large cap will happen now, and the mid cap still there is a long way to go before they come up to the all-time high.
And Darshan, so has anything, I mean, that's the moot question that everyone comes back to, right? Has anything changed materially and fundamentally, if not for the immediate 6 months, then for the long term for the pharma
So
space?
basically, if you look at the numbers that came out and the commentary, nothing was changed, because all of them gave issues, said issues of pricing pressure is here to stay. No doubt, the positive fact was that growth will come in. That is something that most of them said, but pricing pressure was there. What had pharma companies said? Basically, price erosion and pressure will continue to be there in the generics. This is across the board in the commentary what the FY19 management had said. Apart from it, the other factors that they pointed out was the fact that slight revenue will grow, and that also comes in on a lower base this time around. They're all more bullish on the domestic business coming in. Also, the focus will shift now to specialty products, to branded drugs, biosimilars, apart from the usual generics. So this is what they've said. Focus is getting on plant cleared. So this is what a lot of companies saying that Sun Pharma got its act right, but still Lupin has problem of its own, Alkem has problem of its own, a lot of these companies have problem of their own. So this is something that we need to watch out for. What was the main triggers for the rally? The only trigger right now was that Sun Pharma's Halol plant got a VI status. This came a few days ago, and yesterday overnight news in terms of the EIR. So that's the big trigger that come in. The volumes have been extremely high for the last 3 days. If you compare it, extremely high volumes across the board for pharma companies, and valuations currently are much lower than the historic valuations what we've seen. Just to end it, just take a look at the valuation. Sun Pharma is most expensive pharma stock on an FY19 basis. It's 29 times. Aurobindo is the cheapest MNC, cheapest large cap pharma company currently at 13 times, but valuations no longer are cheap for pharma companies. If you're looking at the mid cap also, valuations are lower for companies like Granules, Strides, Glenmark, because they have problems of its own, and Biocon has a valuation of 60 times, much expensive, but that was on the basis of their biosimilar pipeline. And look at the valuations of the MNC pharma company. GSK is at 50 times, Merck is at 32 times, almost 30 times on Pfizer and Abbott, but that's where money seems to be moving in, and these are the counters which pretty much are rallying over the past few days.
Well, thanks for putting that into perspective. That's all that you needed to know about Pharma, Sun Pharma and Spark in particular, and the pharma space by and large in general. Thanks a lot for that, Darshan. Remember, TCSC is the other big one that remains in focus, and we'll talk about that a bit later on. But on First Word, we've saved the best for the last piece on First Word. Goldman Sachs asked its clients to choose their playing 11 and managing for the FIFA World Cup 2018, and the consensus team has players from 6 countries. Under the German manager, Low, the person who took Deutschland to victory the last time around and is around for this time's World Cup as well. Agam, who's gone through that report, talks about who's made it to the list and if there are any surprises. Agam, you've been at football now. Yesterday you're talking about 2 brokerages. Today you're talking about Goldman Sachs.
That's right. That's right. And Neeraj, you mentioned 6 football teams, but it's predominantly Germany and Brazil when it comes to the composition. And this is something which may come as a rude surprise to Barcelona fans, because 4 of these players come from Real Madrid. But let's start off with the kind of players that we have. Let's start from the back. Right at the top, we have David De Gea. Now, this may be a little bit of surprise if you were looking for Manuel Neuer, but like I said, we've seen him come through, and possibly the one major reason why we saw Manchester United much higher on the list in terms of the Premier League team. But that's as far as David De Gea is concerned. Do remember, has the highest votes. Of course, Manuel Neuer also lost out because of his injury concerns. But moving on to the defenders, we have Marcelo, which is right at the top. And Marcelo had nearly 60% votes from Goldman Sachs client list. Marcelo would make it to any team, and coming fresh off the Real Madrid win for the UEFA Champions League. Next up will be Mats Hummel, again a solid defender, also the winner of the previous World Cup. And once again, it's not a surprise that we do have a Bayern Munich defender coming into the fray. Sergio Ramos, this perhaps will get the most amount of votes. Well over 60% votes go in for Sergio Ramos. Again, a solid defender, a tad hostile often, but we're going to have to watch out for whether or not he does have, well, a relatively easy World Cup this time around. And of course, finally, you have Joshua Kimmich, again from Bayern Munich. So we'll be watching out for some of these defenders as far as the World Cup's team is concerned. Now, moving on to the midfield. Right at the top, we have Kevin De Bruyne. Again, he's had a massive season with Manchester City. In fact, the Premiership winners, and has had a very important role to play as far as the Premiership title is concerned this season. And next up, you will have someone like, well, Felipe Coutinho. And he's actually had a massive season with 2 seasons this time around, because two teams, because the first half was with Liverpool and the second half was with Barcelona. He won the title with Barcelona, and well, he's just going from place to place. And don't forget, he's pipped Paul Pogba in this position. Paul Pogba, who's had a very, very subdued season, and that's possibly the reason why he's been voted higher than Pogba. And of course, what can be said about Toni Kroos? Toni Kroos, again, right at the top. Again, a Real Madrid player who's won the UEFA Champions League, and also, well, as a part of the German outfit to have won the last World Cup. And this is where things get a little more interesting and perhaps a little more contentious too, the strikers. Let's start off with Neymar. Neymar, again, well, we all know he's worked well for PSG, and when it comes to the way things have panned out for him with PSG, before that in Barcelona, it's no surprise that he makes it to this list with a decent number of votes. But moving on, the list cannot be complete without Cristiano Ronaldo. Of course, he makes it to the list, the leader, and bringing in Real Madrid ahead for the 13th Premiership title. Also, well, and this could possibly be one of his last World Cups. And I would say the same for Lionel Messi. Lionel Messi has the highest number of votes on the Goldman Sachs poll. And well, of course, considering this is going to be his last World Cup, it is also going to be emotional for a lot of these Lionel Messi fans. So we're going to have to wait and watch as to how far can Lionel Messi pull Argentina ahead. But that's the list as far as Goldman Sachs is concerned, and I'm sure a lot of these players would make it on a whole host of other avid football watchers as well.
The coach who everybody believes is the one that could lead his team to victory.
Right. Yes.
Let's wait and watch. I'm not surprised with Messi at all. I'm a Messi fan. I don't know about you, Agam. Messi or Ronaldo?
No, there's no taking. Even if you're not a Messi fan, you can't but not be in awe of the way he plays football. So it's a given, and that's followed by Cristiano Ronaldo. Orals of talent, and these guys have worked hard. They put in their hours to be where they are right now.
Well, that's the team from Goldman Sachs World Cup 2018. Remember, we've been continuing with this World Cup coverage, and tomorrow, on the eve of the World Cup starting off, we'll get you some interesting perspective on First Word as well. But let's come back to reality. And Reena, that's the question really, that the team that Goldman Sachs is saying will lift the World Cup. That's the big question as well.
Absolutely. So let's start off with the round of 16. Again, Goldman Sachs has used econometrics to go ahead and predict the World Cup winners. So let's start off with the rounds of 16 on either side and see which of these teams are expected to come in. A lot will be similar to what we saw yesterday in terms of brokerages calls coming from UBS and Commerce Bank. But in terms of round of 16, again, you have France and Iceland, Uruguay, Spain, Brazil and Belgium, of course, planning to make in the list. And on this side, we have Portugal, Argentina, and Germany, along with Switzerland, and of course England, also likely to be in focus. So which of these teams moves in to the quarterfinals? Well, you can place all your bets on Portugal and Argentina. This is not a surprise at all. England may perhaps be a surprise over Colombia, but well, again, that's all said and done. It's taken into consideration. So that's as far as your first list of quarterfinals goes. And on the other hand, of course, you have France and Spain, and that's going to be a very big match very soon. Right in the quarters, you already have France and Spain playing in there, and the likelihood of Brazil and Belgium playing here as well. If we see Belgium strike off, we will see a very good team strike off very early in the stages, and this part perhaps is comes as a disappointment to me, because a lot of the good teams will be moving out early in the stage. What does it mean for the semi-finals? On this side, as you can see, again, Portugal is expected to pip Argentina. That's Cristiano Ronaldo's team is expected to pip Lionel Messi's team and come through on the semi-finals. And this one is a no-brainer. This is where all the probabilities will be with Germany to move in and beat England. On this end, however, we have France expecting to beat Spain, and do remember, we do know that France has a very, very strong team, and of course Brazil is expected to come through. Now this is where things get interesting in the finals, and as one might expect, they would see Brazil and Germany play, and of course the winner is being projected as Brazil from the Goldman Sachs team. I just want to point out one very interesting theme. France, I want to talk about France a little, because France has a higher probability of winning the World Cup than Germany, but its bad luck is that it meets Brazil in the semi-finals, and that's the reason why you see Brazil come through and win the World Cup. So all sorts of odds playing out here, and all sorts of combinations coming through. So we're going to have to wait and watch, but for now, at least from the Goldman Sachs point of view and the way they've run their econometrics, it's Brazil. That's followed by Germany in second place.
Let's wait and watch. Agam, thanks for putting that into perspective. That's all that we have on First Word today, an extended one. But lots lined up on the show from the market's perspective. We talk about the weak AC sales this summer with Sunil D'Souza of Whirlpool, and discuss Bharat Forge's stake buy in the UK-based electric vehicle company with Executive Director Amit Kalyani. Right after this break, though, full tilt towards the day's trade.
Welcome back. You're watching Indian Open. Let's see how the Asian markets are faring at this point of time. Let's pull up the Japanese market. The Japanese markets are up almost 0.2%. The Shanghai is opened down almost 0.5%, and the Hong Kong markets are down 0.5%. The Korean markets are shut in account of a holiday today. The SGX Nifty, which gives an indication of how we are panning out for trade, is down almost 20 points. But it's important to see how the FNOQs are panning out, because the Nifty seems to be moving higher. Extremely strong amount of writing by the put writers came in yesterday at the 10,700 and 10,800. Agam, are we headed higher? Is that what the Nifty data indicates?
Well, that's what the data is indicating, considering so much put written. But let's start off with the futures, and since we've seen the index move up higher by as much as 0.5%, open interest also towards accumulation of longs. And when it comes to the Nifty bank futures, we are looking at more strengthening there as well, with longs coming in. When it comes to the India Volatility Index, again, well, we've seen a drop around 3.5%. This is not untoward, not unexpected, at around 12.7. The Nifty put call ratio has edged higher towards the mark of 1.6, and that may lead to some traders thinking that Nifty is in a slightly overbought position, though it's still not at around 1.7. That's where, well, things can get worrying. But as Darshan was mentioning, we're seeing more writing around the 10,700 and the 10,800 puts, and we are seeing a little more support building around these levels. So we'll be watching out for some of these, and there's been very little change in open interest when it comes to any of these calls, especially the 11,100, which has seen a little bit of writing come through. In terms of stocks, we're watching out for Just Dial, which has moved into the F&O ban, and 2 or 3 other stocks that I want to mention. Tata Elxsi, it's picked up steam quite substantially, looking at longs building in with another 29% added in OI, and with Tata Elxsi, we're looking at Shasun up 4%, or open interest increase of as much as 16%. So these are some of the stocks that I'm watching out for in today's GF trade, and of course the benchmark indices, whether or not they hold about 10,800.
Okay, many thanks for that, Agam. We'll certainly watch out for all those counters. I'm really, interesting how Tata Elxsi has moved. The entire IT pack is up almost 19%, and you add in the big news of today, TCS buyback, and probably the rally could continue. So we were talking, and we were seeing that the Sensex is up 4%. The IT index is up 19% on a YTD basis. So money, and the other sector where money is moving in is the FMCG space, which was up another, I think, 10%. And look at what happened with Page yesterday. So I think the entire consumption space, IT space, Pharma obviously will have a relief rally today. But I think that's what we need to watch out today. Yeah,
HUL, Godrej Consumer at new highs as well. Let's get in an initial word from Vinit Bolinjkar. He's head of equities research at Ventura Securities. Vinit, good having you. Thanks so much for joining in. What's the thesis on the TCS buyback? IT's had a great year, and IT companies are now returning money back to shareholders in a much more quicker fashion than what we've been used to in the previous decade. What do you make of this TCS buyback announcement, and what's your favorite IT stock, Vinit?
So, Tata Elxsi is one of my favorite IT stocks. I think it is one of the companies which is best placed to play out the entire pack of new technologies, be it VR, AI, autonomous engineering, and the stuff and the works. And another stock which works very well for me in the networking space is Saskel. So these are 2 of my stocks which I think we could see some good growth coming out. And as far as TCS is concerned, they've been sitting on a lot of cash, and with a kind of a landmark year in their lifetime, it's traditional to be rewarded, rewarding the shareholders. So we've seen money being paid back to the shareholders. It also inspires confidence in the fact that the company is seeing growth out there, and generally the markets have very heavily rewarded companies which buy back stock.
Okay, just hold on, Vinit. Our research team is ready here. Lots of stocks that we need to watch out for. Obviously, as you pointed out, the big news will be the TCS buyback, what is expected. A big Morgan Stanley report and a target price raise coming in on TCS. You also have some of the other stocks that you need to watch out for in today's trade. Page Industry is another interesting stock that we need to watch out for. So let's get in a word from our researchers. Shraddha, Nikki, and Agam are here. Shraddha, what are the stocks that we need to watch out for?
Darshan, I'm going to start off with Bharat Forge, which has acquired 35% stake in Teva Motors for £10 million. That's about 90 crores or so. You have an ET report which says that the past promoters of Fortis Healthcare have moved funds via the arms investments. That's according to investigations by law firm Luthra and Ruthra, and that's what has come in the ET. They've also added that one of the bidders, which is Radiant Lifecare, has raised concerns over limited due diligence slots that were given, so watch out for Fortis. That apart, buyer will make an open offer for Monsanto India to acquire up to 26% stake. So the open offer price has been fixed at 2926, which is about 2.5% premium to yesterday's closing price. You have Uttam Galva Steels, which will be in focus. Now, Asia Investment Corporation Mauritius sold 0.7% stake yesterday in a bulk deal out of the 6.02% stake that they held of 31st March. Advanced Enzymes is another one to keep an eye out for. They're going to be meeting a couple of investors, including Barron Funds and Dalton Investments later this week. And we also have a government announcement which has been made. The Pradhan Mantri Awas Yojana interest subsidy now will be for houses up to 2,100 square feet. So basically the government has decided to increase the carpet area by about 30%. So you will have NBFCs and real estate stocks in focus. So the larger real estate names, especially like Godrej Properties, DLF, Oberoi Realty, and also your names like Canfin Homes and Indiabulls Housing Finance. Let's see how all of them react.
Okay, the other important news is TCS and the big buyback that they announced. Obviously, the details will come in on Friday when the AGM happens. But what do you make of this? And there's an important Morgan Stanley note also.
That's right, Darshan. So I've just run some numbers on the back of the envelope numbers with respect to the buyback. Considering we have about net worth around 85,000 crores, if you consider 10% of your net worth, that comes to an amount of around 8,500, and that will be just the board approval. It will not require shareholders approval. With shareholders approval, it can go over 10% up to 25%. That sum comes to around 21,250 crores. Now, with cash and equivalents along with current investments, TCS currently holds that around well over 40,500 crores. So it's good to go in that case. And that said, I do want to address that last year the company had carried out a buyback worth 16,000 crores at around 1,425 rupees per share. This is of course after you consider the post bonus, and based on that we've seen TCS move up quite substantially to well over the levels of 1,700, so over 20% appreciation even after the company's carried out a buyback. That said, we have a Morgan Stanley note which talks about the prospects of the company. So they remain in overweight, and they've also hiked the price target to around 2010 rupees from around 1,825. And Morgan Stanley says that TCS is very well positioned as a next-gen service provider. Its digital adoption has become broader and deeper, and considering the US economy is doing well, and we are also looking at the rupee depreciating, these are some of the factors that can aid and be tailwinds for TCS going in. And on the back of some of these factors, they're expecting TCS to eventually move above the margins of 26 to 28%.
Okay, so TCS will be the important IT stock to watch today. And obviously the big development that came in overnight was Page Industries indicating that their partnership with Jockey will extend for another 22 years. So what's the big news there, and what's the implication?
So Page Industry has extended the license pact with Jockey until now December 2040. Remember earlier the pact was until 2030, and these licenses were in India, Sri Lanka, Bangladesh and Nepal. Apart from that, it also has retail outlets, a good 20,000 retail outlets in India. It's an exclusive licensee for Jockey Innerwear, as we know, and it's present in the premium segment of Innerwear category via brand Jockey. In terms of the market share, 12% comes in from the men's segment, and the remaining 21% comes from the women's segment. However, in terms of the revenue, it's skewed towards the men's segment, where 47% comes from the male and 19.4% from the female segment. In terms of revenue, 30.5% comes from the sports segment. In terms of how the stock has performed in the last 12 months, it's a good 55% run that we've seen for this counter. But then in terms of the return potential that we have, as per the Bloomberg consensus, is almost a 0.8, almost a flat kind of expectation that we have from the counter.
Okay, so we'll watch out for Jockey. Vinit, any view on Page Industries? It's been a marked outperformer, but do you believe valuations are now too steep for the company, or do you believe that the growth will overshadow that?
No, I think this kind of sharp uprise that we are seeing is not warranted for extension of your terms of agreement. It's already an expensive stock, and this just makes it a tad more expensive, where your price is running ahead of fundamentals. So I believe that the price is stock to perfection. If you take into consideration all the aspects of the growth story, everything is built in, and you are making the stock ripe for any kind of shortfall on the performance of the company during the quarter. If you have them missing any of the analyst estimates, the stock can fall off very steeply. So given these facts, while Page Industries is a hold, I don't think you should be buying at this price.
Will you buy into Sun Pharma, Vinit Bolinjkar, after the news?
Yes, I would buy into Sun Pharma, but at lower levels, not at current levels.
Okay, you think this EIR has been priced in by the move that has been made by the stock already?
I believe it has been priced in, and the earnings will crawl up slowly, not as fast as the market has been digesting the news. So given that fact, I believe that around 510 levels gives you a better appreciation potential than from the current levels.
Okay. Vinit, stay on. So much more to talk about. A bunch of other stocks in news, some FMCG names that we'd like to discuss, and maybe a stock recommendation as well in investing idea. But it's 8:45 or slightly above that. Let's get in our derivative and technical experts on board to try and figure out how are they approaching trade today. Chandan Taparia, Associate Vice President at Motilal Oswal Securities, joins us on the show, as does Gaurav Bissa. He's Assistant Vice President at LKP with us on the show as well. Gentlemen, both of you, very good morning. Thank you so much for joining in. Chandan, promises to be a slightly subdued start, not surprising. What would your trading stance be today?
Yes, looking at the market movement, the buy on decline is the clearly strategy, and that is working well from last couple of trading session. Supports are gradually shifting higher in the market from last couple of trading session, and put call ratio has seen surge to 1.59, which clearly indicates that put writing is visible, and put writers are quite comfortable to hold the market at every small decline levels. We have seen decline in the volatility index. India VIX is now near to 12.5 level, holding well below 13.5 level. So lower volatility with rising put call ratio clearly indicates the bullish stance of the market. So now till it holds about 10,770 zone, any decline is the buying opportunity, and we are looking for an up to us 10,888 and Karnataka election day high of 10,929.
What about you, Gaurav? What's your overall view on the markets?
Good morning. I concur with the view with what Chandan said, that the fabric of the market is quite positive, and we have been struggling to close about 10,800 mark, and yesterday we saw a comfortable close about 10,800. It now opens the door towards level of 11,000, 11,100. One you can buy if it opens around 20-30 points down, even that is a good price. Have a stop loss of 10,750 on the upside. The immediate targets of 10,950 to 11,000 can be seen.
Okay. Gentlemen, stay on. We'll talk about your specific stocks as well, but it's 8:50, that time of the show when we get our special segment Bloomberg Edge, wherein Jayesh brings us a pattern that the Bloomberg terminal is thrown up on a stock. And Jayesh, I'm not surprised, it's an IT stock.
That's right, Neeraj. In fact, Mindtree is what the terminal has thrown up today, and for good reason as well, because two of the proprietary Bloomberg indicators that have got triggered on the same day as of yesterday's close. So first, let's have a look at how the trender actually works. The other indicator that I was referring to is the fear and greed, but the trender uses average true range for as one of the key inputs for its calculation, and it helps you to determine not only the buy and sell signals but also where to place your stop loss. Simply follow the color and you'll get your buy and sell signals. Green is indicative of buy and red is indicative of sell. Let's have a look at the chart of Mindtree. What we have seen is post-April, the stock was actually consolidating in the 1100 to 1000 range. And as of yesterday's close, you can see that this green candle that has closed above the red resistance, which was indicated by the trender indicator, which means that today onwards you will have a lower green shadow over here, which will help you to place the stop loss. So simply follow that for your stop loss. The bottom panel is the fear and greed indicator, which also shows that as of yesterday's close, it has actually turned positive by switching from red to green, which also gives it a buy signal on Mindtree.
And past instance, Jayesh?
Works really well, Neeraj. The trender indicator, if you had bought all the indications in the last 12 months, net profit would be in excess of 58%.
Okay. So Mindtree is the stock that the Bloomberg terminal is throwing up. Let's get back to our technical analyst. Chandan, you go first. What are you recommending for today?
We are positive on the most of the IT counter. Nifty IT index itself has given a fresh breakout after a long consolidation. And on last trading session, we have seen open interest addition of around 27-28% in Tata Elxsi. TCS Heavyweights also added open interest near to around 10%. NIT Tech also given the breakout in line with Mindtree and the KPIT. So most of the IT stocks are showing strength and expecting this momentum to continue. So TCS, if it opens flattish, then that will be the buying opportunity. And here the stock has been making high rise, high lows from last 4 to 5 trading session. It is all set to give the breakout from its extended pole and flag pattern. Mechanical indicator like RSI, MACD also have given the positive crossover in the breakout. We have seen the put writing activity, and the long also indicates the positive stance, and the stock has potential to head towards its swing high or lifetime high of 1837. So recommending to buy with a stop loss of around 1745 and looking for an up move towards 1830, 1837. Second trade is buy on Bharat Finance. This stock has given a breakout, long consolidation breakout has given, followed by the bullish belt hold candle. Supports are gradually shifting higher. It is respecting to its rising trend line, holding well above all the moving averages. So expecting the fresh leg of rally, one can buy with a stop loss of 1160, and this stock also can rally towards 1220, 1230 kind of levels.
Okay, and Gaurav, what are the stocks that you are recommending for today?
The first recommendation would be on Bharat Finance. The stock has been trading between range of 1160, 1180, and finally it has given a close above the 1180 mark. About 5% overreaction has been seen. So fresh long positions that again coincides with one of the highest concentration that we are seeing at 1180 zone, and option-wise breakout has been seen. One can have a stop loss of 1175 on the upside, targets of 1220 can be seen. Second, we buy on Tata Elxsi. We have seen that 28 to 29% overhead additions has been seen getting built in a day. It has given a strong breakout. Volumes have been very strong. Multiple resistance have been taken out with relative ease. One can now aim for immediate targets of 1320 with a stop loss of 1265. I would not be surprised if the stock can move at 7-8% or even 10% from here. It will be a slightly positional view about a month or so.
Okay. Thanks for those ideas, Gaurav, Bissa as well. Vinit, Bolinjkar, yesterday I was we're looking at the list of stocks which hit fresh highs in trade yesterday. The list is interesting. It's got a first source out there which is, well, maybe a few bucks away from all-time highs, but at least trading at 52-week highs. Godrej Consumer, amongst other stocks, hit fresh highs yesterday. And Bharat Financial and IndusInd Bank, that duo continues to rise. Do you like any of these fundamentally? Have you looked at any of these, or do you as a research house look at any of these?
So we like IndusInd Bank. That is one we have. We have a target of 2300 on that stock. We also like Godrej Consumer. I think that is one of the stories which is well placed to move up. Management has always guided for a 30% CAGR growth over the long term. So I think that is one consumer story that is going to play out. So these are the two particular stocks that we like, in which you have mentioned.
Okay, Vinit, any word on Tata Elxsi, because that one was extremely strong. Yesterday moved up on high open interest build up. The volumes were strong, trading at a new lifetime high. What do you make of this counter?
So as I said earlier, there are 7 advancing technologies which are going to be in the limelight over the next 4 to 5 years. These are the fastest growing technologies, and they have the highest exposure to these. So you talk about autonomous engineering, you talk of AI, you talk of machine learning, you talk of AR, VR. All these technologies, the company is very centerfold and working with the very, very big names across the globe. So we are going to see some strong traction in these stocks and in this stock, and the story is going to be a steady compounder as we go ahead. So while valuations are may seem on the high side, the implicit story is very strong, and this will continue to support the valuations.
Is that your favorite mid-cap IT name, Vinit?
It is my favorite IT name.
Okay, favorite IT name, not just a mid-cap IT name. Fair call. Vinit, yesterday we also had a clutch of PSU names move up. Whether it was a dead cat bounce or not remains to be seen, but the likes of MMTC, Dredging Corp, and a clutch of other names moved up. PSU banks the last 10 odd days have made a serious move too. Are you guys looking at this pocket at all?
So we are looking at, personally I think SBI is slated to move up. We have to understand that our economy is at the stage of a upswing, given the fact that our capacity utilization of the entire manufacturing system is at about 70 to 73%. With a 7% growth, we'll soon be hitting 85% over the next couple of years, and that is when the inflation starts creeping in. So if we have to deal with the impending demand and a growth rate of 7% of GDP, CAPEX will have to be undertaken now. Now, if you were to look at the entire banking landscape, there are only two large companies which can take on very large projects. One is SBI and the other is HDFC Bank. So on the front of credit growth, I think SBI is best placed to benefit from this. Secondly, we are going to see a lot of write-backs come through because of the provisioning norms. And I think there has been a lot of cleaning of the system, and with the banking code being introduced and implemented very aggressively and firmly, I believe that the worst of SBI is through, and that is what the market is recognizing, and hence we will be seeing that stock move up over the coming few days.
Okay, Vinit, one of the stocks...
Another stock that you mentioned out there, Dredging Corp. Yeah,
go ahead on Dredging Corp.
Yeah, go ahead.
No, we want your view on Dredging Corp.
So I think Dredging Corp is Dredging Corp is a very interesting story, given the fact that the government is looking to, the Sagarmala and the inland waterways project. So I think there is not much competition there, and we will be seeing this stock go through. And in the next round of PSU divestment, this could be one of the stocks where some stock could be offered.
Okay. Less than a minute to go for the market open. Just getting back to Gaurav Bissa. Gaurav Bissa, I don't know if you recommended Godrej Consumer or Jyoti Labs or any of these FMCG names, but they're shot up in trade. A quick view here.
So Godrej Consumer is one that has been in the perennial uptrend. We have seen that the stock has been gaining grounds. We have seen a lot of over-addition happening. If somebody wants to have a fresh view for trading per se, buy about 1174, have a stop loss of 1162. On the upside, 1200 can be seen. Jyoti Lab, I think it's already moved up quite a bit. We had given a recommendation on technical basis yesterday, but I think a much part of the rally has been over. It can move some more, but overall, I think one should skip Jyoti Lab for Godrej Consumer. About 1174, one can play for a trade.
Okay, Gaurav, just wanted your view on Mindtree. The Bloomberg Edge did manage to throw it out. We'll just wait for pre-open. Just hold on, Gaurav. The pre-open is just about to start. Post the pre-open, we'll take your view on Mindtree. But Neeraj, it's the SGX Nifty is indicating a downtick. Let's see what the Bloomberg, the prices are indicating. Let's bring up Sun Pharma. Let's bring up TCS, that will be interesting, and Page Industries. I think these are the three ones that we need to watch out for. 10% upside, unlikely that would be happening, but yes, the news is extremely positive. TCS, the buyback, let's see what it has done for TCS. TCS manages to open up almost 10%. It's just pre-open rates. And Page Industries is the third one I want to see. It's up almost 2%. And fourthly, if I may, Neeraj, Reliance Industries. Yesterday closed at its lifetime high on a closing basis, inching close towards 1011, which is its all-time high. So probably that is something that we need to watch out for.
Yeah, well, Darshan was talking about Sun Pharma Advanced Research. I think we should bring that one up also and see if that is reacting as well. Well, a more sedate and a more believable reaction for Spark. Sun Pharma was all over the place, just the pre-open rates really. I don't think it'll have a 10% uptick, but Spark certainly moving up, showing some spark, so 3% higher for that one as well. What else? Let's just try and see if Bharti Airtel is reacting at all to the tariff war of sorts. Well, actually it is interesting. It is not a war really, just a small retaliation, but nevertheless it's having a sentimental impact in the first couple of minutes. Let's see if it lasts or no. Difficult to say that really. And just pointing out a couple of stocks at the broader end of the spectrum. Want to see what NRB Bearings is up to. It had a big spike in trade yesterday, late trade. Let's see if it's continuing from where it left off. Yeah, marginal upsides for NRB Bearings, so that one too is doing reasonably okay. The bond yields and the rupee should come up on your screen, and let's see what's happening there. 67.85, that's a dramatic pullback for the rupee in trade. 67.61. Okay, again, the rupee opening flash was 67.85 maybe, but 67.61 is some correction, nothing too steep, but a correction nevertheless. So the rupee starts off slightly lower. The bond yields at 7.96, steady as a rock. Before we get in our next guest, let's just get in Somit Sarkar with a quick perspective of what top brokerages are saying in the session today. Somit, good morning.
Good morning, Neeraj. On the big brokerage calls for the day, first we have is Macquarie on KRChoksey International. Now, the brokerage has initiated coverage on the stock with the buy rating, that is an outperform rating, and a target price of 454. Now, according to the brokerage, KRChoksey International is a play on railway electrification opportunity in India, with railway electrification picking up pace with nearly 38,000 kilometers of non-electrified tracks. The growth opportunity is strong over the next 4 to 5 years, according to the brokerage. Now, the brokerage is expecting railway segment to contribute nearly 20% to the total revenue of the company by FY21 from 8% currently. Now, the brokerage is expecting KRChoksey International's return on equity to sustain at more than 20% levels, while it expects the leverage to come down further going forward. Now, the company's revenue and net profit is expected to grow at a compounded annual growth rate of 13% and 21% over FY18 to FY21. Lastly, the brokerage says that KRChoksey deserves a premium to its peers as there are multiple catalysts in place to drive growth for the company. Second, we have a Citi on Reliance Industries. Now, the brokerage has maintained its buy rating on the stock but has raised the target price to 1,180 from 1,150. Now, according to the brokerage, higher crude prices and weaker rupee are benefiting the company. Now, higher crude prices have improved the economics of companies' ethane imports and petcoke gasification plant, and this improvement will lift the company's gross refining margin by close to $2 per barrel by FY 2021, according to the brokerage. Now, the brokerage also says that the next trigger event for the company will be the launch of fiber to the home and enterprise business segments. Now, the brokerage has raised its target price of Reliance Industries because it has hiked the EBITDA estimates for the company by 5 to 6% for FY19 and FY20. Lastly, Reliance is the top large cap pick in the India oil and gas space for Citi, and it also says that the current prices provide an attractive entry point when it comes to Reliance Industries.
Okay, many thanks for that, Somit. Jayesh had just indicated the Bloomberg terminal threw up Mindtree as the Bloomberg edge. Vinit, before we let you go, a word on Mindtree. Do you like Mindtree? Any views on this one?
So I think it's a tad expensive now, so I would let it pass.
Okay. Many thanks, Vinit, for joining us and speaking to Bloomberg Quint today. And I'd ask Gaurav also his view on Mindtree before the pre-open. Gaurav, very quickly, what do you make of Mindtree?
Well, Mindtree has given a small breakout, but the point to note is that 1055 sort of levels are very strong resistance level. We have seen a couple of times there have been quite a reversal happening from those levels. If you look at the over addition, it has been minuscule 2-3%. So I don't think one should buy at the current price of 1045.46. Buy about 1055, target of 1100 on the downside. One can have a surplus of 1040.
Okay, that's the view that's coming in on Mindtree. Deven Choksey of KRChoksey joins us on the show. Good morning, Deven. This is Darshan here. Firstly, a word on Reliance, which is now almost just 10 rupees away from its fresh lifetime high. A word on Reliance, and do you think Reliance now needs to take pole position for the Nifty to inch higher?
Good morning, Darshan. On one side, we have the WTI crude quoting at a lower price compared to Brent crude, and I think in the global markets too, the high sulfur grade crude, so we call it sour crude, I think it's quoting at a lower price. And Reliance has a typical ability of processing the heavy grade crude, and that's where I think they earn their maximum amount of margin called GRM, which they are always enjoying over and above the benchmark GRMs that the companies are earning. So I think this company is basically favorably positioned today because the sour grade of crude is available at a cheaper cost to them, and that's where I think they are probably in a better situation currently as far as I think the refining business is concerned. Similar is the situation with the petrochemical segment of business, where the prices have gone up for them because of the global markets phenomena, crude oil prices, etc. And that's where I think the margins are suggested to be on the improvement side for the company. Both these core business portfolios are cash generating engines for the company, and that's where I think the company is very well positioned. On the other side, the consumer facing businesses in retail, in Jio, as well as in media business, I think in each of these three businesses, the company has been very smartly gathering the customer and probably reaching out to the consumer at a faster pace. So I think valuation wise, if you look at these three consumer facing business, according to me, they are not fully getting reflected into the core Reliance at this point of time. And that's where I think you probably argue for having this stock in the portfolio, because somewhere down the line, I think when the consumer facing business starts commanding the valuation, the stock would probably start giving you a phenomenal rate of return. So that's the viewpoint coming from our side. We believe that I think this is a good opportunity for staying invested in the investment portfolios.
Okay. Deven, stay on. Gaurav and Chandan, stay on as well, gentlemen. We haven't been able to do too much justice, but lots of news flow that we had to dissect. And one more piece of information that has, of course, come out now that we've hit the 12th or the 13th is the kind of changes that have happened in mutual fund portfolios. Today, HDFC Mutual Fund, they've reduced the holdings in at least two Anil Ambani-led companies in May, but that's not the big thing. The big thing is that the country's largest second fund house has also made some interesting purchases in the month gone by. Jayesh Kalyani is here with what HDFC bought and sold last month. Jayesh.
So Neeraj, first let's have a look at where they have increased and decreased stake. In terms of where they have increased stake, we have Vijaya Bank, which has, they've purchased more than 1.2 crore shares, followed by Tata Chemicals. After a long time, this name appears on the list. 51 lakh shares added over there. Axis Bank, 45 lakh shares they've added, followed by ITC and HPCL, 41 and 42 lakh shares added over there as well. Where they have reduced stake is the big chunk has gone out from Tata Motors. Nearly 1 crore shares they sold off over there. Network 18, about 82 lakh shares sold. Delta Corp and Gammon Infra, also some of the names featuring in this list, about 76 lakh and 58 lakh shares sold from that those two counters as well. And lastly, we have ICICI Bank, where they have reduced stake to the tune of about 55 lakh shares. But where they have purchased afresh and sold off completely, let's have a look. Indostar Capital, the IPO they subscribed and they got about 14 lakh shares over there. GMR Infra, 13 lakh shares. Hindustan Zinc from the metal space, they have purchased afresh from 4.5 lakh shares. Mindtree also comes into their portfolio, but not much, just about 47,000 odd shares. And GSPL, about 15,000 shares that they have purchased over there. Followed by the sell-offs, as you were mentioning, Anil Ambani Group in focus over here. Reliance Naval completely goes out of the portfolio, so does Reliance Infra. MRPL, about 4.8 lakh shares they have sold off completely, followed by Precision Camshafts, 3.2 lakh shares, and Sangvi Motor Movers also goes out of the portfolio of HDFC Mutual Fund.
Okay. Thanks a lot for that, Jayesh. So that's the sum and substance of what HDFC Mutual Fund has done in the month gone by. However, it's 9:09 and it's that time of the show when we are minutes away from the market open. So let's quickly tell you all that you need to know to stay ahead in trade today. TCS will consider a buyback on its upcoming annual general meeting on the 15th of June.
Good news for Sun Pharma as it received the Establishment Inspection Report or the EIR for the U.S. FDA for its Halol facility in Gujarat. The stock is up 2%.
Page Industries has extended its licensing pact with Jockey until December 2040.
Among the companies meeting investors today include PI Industries, Advanced Enzymes and Eris Life.
Brokerage firm Macquarie initiates coverage on KEC International with a target of 454 as a play on railway electrification.
And finally, Just Dial is the new stock in the F&O ban, while Adani Wilmar has been identified as the highest bidder for Ruchi Soya.
Let's wait and watch what happens thereof to all of those names. Deven, the big boy TCS, for somebody who doesn't have an IT stock in the portfolio, there's this buyback announcement that has been done as well, which only indicates the Indian IT company's readiness now to return more to shareholders. Is it advisable to buy behemoths like TCS and some of the other large caps, or would you opt for nimble mid-cap IT names?
Well, I think two questions. On one side, the TCS continues to do well. They've been signing some of the long duration contracts of 10 years in last few quarters, and that gives you a good amount of clarity and the visibility about the company's growth going forward. In fact, I think recently for M&G Prudential, I think they signed the contract in UK, which is of a 10-year contract that they have signed, which gives a fairly good level of revenue visibility of the company for next 10 years. So fundamentals are remaining strong for TCS, though I must say that I think on this base they probably may end up producing, I think, a single-digit growth, or at the most I think little above the double-digit growth, I think, as we would like to put it across. So don't expect too much on that side from the companies. But more importantly, I think they are returning money back to investors, as you rightly pointed out. Now, there are two situations or issues that I could argue on this subject. On one side, you have the opportunity to go for inorganic growth, and internet-based e-commerce companies or the application companies where largely the growth is being seen in a systematic manner. They've been growing their platform very systematically. I'm not seeing that kind of an appetite from likes of TCS or even Infibeam for that matter, because this is one area, if you see, I think all the platform-based providers, I think they have grown very significantly, including the recent ones like I think Netflix, I think which has grown to a market cap of more than $100 billion. So from that point of view, I would think that I think the companies like TCS and Infosys kind of companies will have to show the mettle to buy into good quality internet-based businesses or platform-based businesses. If the investors are coming to the decision, I think if the investor has to take, if the investor is basically happy with the small growth which the company is producing, there is no need to part with the shares in the buyback. But if they think that they could swing the portfolio in favor of large growth oriented companies, then probably I think that may be a good opportunity too. So I think it all depends on case to case basis as far as how the investor position themselves in the portfolio. I for one would believe that I think given the kind of cash that they have in the balance sheet, they have a larger ability to grow the size of the company at a bigger pace. I think so. But definitely that clarity is not coming out from the company, so we'll have to wait and see. But I believe that I think that's a distinct possibility.
Okay, Deven, stay on, so much more to talk about. We'll take in top stock ideas from our experts, but just a quick thought from Chandan first. Chandan, Nifty likely to start off 44 points higher. Quick, less than a minute to go. What would a trade on the Nifty be today?
Yeah, we'll continue to be with buy on decline strategy. And if it opens higher, then we have to put support near to 10,800, and we'll be looking 10,929 plus kind of level.
Okay, and a minute to go. Gaurav, anything interesting in the pre-open that you would like to recommend?
Well, if you talk of stocks, I think Godrej Industries is one that is looking interesting. It gave a good close. We're not seeing aggressive long build-ups getting built, but if it sustains 610, 640, 645 can be seen. One can have a stop loss of 600.
Okay, Chandan, what about you? Your top stock for the day?
Yeah, already discussed. Momentum could continue in most of the IT counter, including TCS, Tata Elxsi, and IT Tech. TCS looking for the new lifetime high of 1830, 13.7. And Bharat Finance, which is the fresh breakout, Gaurav also mentioned, positive view on the same, looking for 3.5% movement towards 1220 levels.
Okay, so Godrej Industries from Gaurav, Bissa, and TCS and Bharat Financial as top stocks from Chandan, Taparia. Gentlemen, stay on, so much more to talk about over the next 10-15 odd minutes, but here's the market open today. 0.4% higher. Well, this is a good surprise compared to what the SGX Nifty was indicating, to be honest. The Asian markets too, all over the place, but we are continuing the momentum. Yesterday came a bit of a pullback, but still towards the latter half of trade, but still a bit of green. Let's bring up the mid caps and the small caps. The market breadth has been positive for the last couple of days. Doesn't seem like it'll be negative, at least at the start of the trading day today. It seems to be positive. Let's wait and watch what happens during the course of the day. The heat map. Fair bit of green. Bharti Airtel, that one sore spot. We'll talk about Deven Choksey about this, but that's down about 1.7%. What's done well? Reliance marginally higher. There is strength in TCS, naturally so, and Sun Pharma. So the couple of boys, the big boys with news, are up and about. It's also having some impact on maybe the larger IT space with Wipro and Infosys, also marginally higher. So that is actually pretty good news. And Pharma continues where it left off. Cipla about 1% higher, Lupin about 1% higher. So Pharma and IT clearly the big movers in the session today. Banks are a bit quiet, probably shows in the bank Nifty as well, which is just about 30 points higher, so hardly any moves in the Nifty bank. But let's take it to specific stocks, 2 or 3 pockets that I think we should mark before I hand it over to Darshan for what's happening across the universe. So Sun Pharma and KEC International, or Sun Pharma Advanced Research, by virtue of the news on Sun Pharma and the Halol resolution up 3.5%. KEC, a call from Macquarie. And after a 5% up move yesterday, KEC up another 3% today. So it continues on its merry ways. Let's talk about some winners. Stocks which were trading near record highs yesterday, flat in the session today. Let's see if they continue. But First Source is in some trajectory, I must say, continues to move up almost every single day. Okay, what about stocks which actually did really well in trade yesterday? There was NRB Bearings, there was BGR, there was Dredging Corp. Save for dredging, I don't think any of the others are making a meaningful move, though. Actually, no. BGR Energy too, about 1.25%, and Dredging Corporation up about 1%. So the momentum continues for these two boys at least. Darshan, what are you spotting?
Surprisingly, I'm seeing AdLabs is up almost 15% in trade. If we can pull that up. So I'm sorry, then I think I must be getting a wrong rate. But among the mid caps, Vakrangi is up 5%, Spark is up 4%. The pharma space is doing well. Marksons has moved up almost 2.5%. Delta Corp is moved up 3% in trade, and KEC is up 2.5%. Nothing much, no big fireworks coming in on the mid-cap end of the market currently. That's what I'm spotting. Videocon continues to grind lower. Manpasan continues to grind lower. Because of the big news in the telecom space, Bharti Airtel is grinding down lower in trade currently. United Breweries has come off the highs of the day. Couple of stocks that I want to point out. Let's take a look at some of the other pharma companies which are under the regulatory scanner. So pull up Wockhardt, pull up Lupin, pull up Ipca Labs. So that you will get a sense. So Wockhardt has opened up higher. Lupin has opened up higher. Dr. Reddy's has probably will have opened up higher. Ipca is up 0.5%. Dr. Reddy's. So all these companies which are under the US FDA scanner are something that we need to watch out for. Let's pull up Aurobindo Pharma, which will give an indication it has been on an uptrend. So Aurobindo Pharma continues to do well. So that's the sense that we're getting. No major other big moves, Neeraj.
Okay, so that sums up the action. Before we get back to Deven, Choksey, just a quick thought on open from both our experts. Gaurav, Bissa, just about 22 points for the Nifty. The Nifty Bank just about 24 as well. Would there be any trades that you would have on the benchmark indices right now?
I think one can buy a Bank Nifty call option. We have seen a breakout happening already. It's quoting at 26,700, 800 call options quoting at 70.72. One can buy with the stop loss of 60 on the upside. Targets of 9,500 can be seen.
Okay. Chandan, Taparia, while TCS and Sun Pharma have been discussed at length, Bharti Airtel started off weak. What do the charts or what do the positions suggest here?
Yeah, Bharti Airtel, it seems that it is taking hurdle at its immediate resistance trend line. That's why some weakness could be seen. And I want to add one more name here in conclusion, that RBL Bank has given a major breakout after the long consolidation of last 6, 7, 8 weeks. It is holding well above 550, so it is all set to head towards 575, 620 kind of level.
Wow, that would be something. Thanks a lot for that, Chandan. Stay on, gentlemen, if you can. But for the next 10 minutes, we'll just try and discuss some of the movers in trade. Deven, Choksey, you spoke about Reliance. What about the impact that Reliance and its moves are having on telcos by and large? Almost every single move is being met with a counter move. Now, how material it would be remains to be seen. But they are certainly fighting tooth and nail, the telcos.
Yes, Neeraj, and I think two ways to look again, I think, at this particular proposition. On the first side, the telcos are quite keen that they don't lose their customers to the competitor. So as a result of which, I think they want to fight the tariff war and ensure that the customer stays with them. Fair point. I think the incumbent would definitely, I think, play the role of, I think, winning the customers by offering the tariff, I think, at the lower levels, and probably offer a better, what you call tariff in form, better offering in form of, I think, higher amount of data for the consumption. Absolutely okay with this kind of a competition if it is going on, because it ultimately benefits the customer and it's the company also to stay lean and mean on their cost structure eventually. The unfortunate part of this particular strategy that I see is that I think they're probably trying to make a classic mistake which Tata Nano did. According to me, I think in order to sell cheap, they particularly forgot the complete DNA of their organization, and I think they ultimately ended up winding up that particular project itself. Unfortunate part, I think the Tata Nano example says that I think even if you want to sell cheap, I think never compromise on the other aspect of the market which is aspirant to become big. And that's where I'm coming from. I think the larger part of the market, at least 1/3 of the consumers that they have in the system today, they are probably looking at higher amount of value-added services, and unfortunately I think they are not being catered to at all, because they are all fighting for winning the customer at a lower price. And that's where I believe that it's a classic mistake happening in the industry. Unfortunately, the regulator in the telecom space also is not having a mind on this subject. And I think that's where I think you feel little sorry that I think they should not end up making the same mistake which Tata Nano did. And that's where I think the viewpoint would be. At this point of time, I continue to remain strong with Reliance Jio because I think they are forming an integrated approach. Jio as a platform gets connected to mobile telephony, gets connected to wireline phones, gets connected to ISP, gets connected to MSOs. The multiple sources of acquiring the customers in the area of communication, data communication, broadcasting based communication, I think they are connecting into the Jio platform. So that is where I think a company is very, very strongly emerging. So we continue to favor Jio at this point of time because they are taking the biggest advantage of those customers that they are acquiring to offer them multiple products under the same platform. So I think let's wait and see how exactly they bring out the revenue proposition, but I think they are at least making sense to me that they are using technology to fullest in bringing the new customer on board.
Okay, Deven, just wanted to get to your notice the pharma sector. Now the news for Sun Pharma is out. It has managed to react. It's up 2.5%. Firstly, do you think that the Halol resolution is priced in? And is there anything else in the pharma space that you like? Because, you know, a lot of other companies are still under the regulatory issues of the US FDA. Anything that, you know, looks interesting there?
Yes, I think the 15% of contribution of Sun Pharma at this point of time, and probably I think if this plant is allowed to operate, certainly I think the market has to give a weightage to this news and market should get to an extent re-rated. However, I think the more important aspect would be the margin that you would be protecting into the global markets. Between 2015 and 16, I think when the pharma companies probably I think touched their peak as far as I think the product and the product margins are concerned. From there, if you see the global markets, the margins in the pharma business have actually got affected and affected badly. And in this kind of a situation, I think you are not likely to get a better margin for the product. So what would win for the pharma companies would be the launch of new generic products, call it branded generic products or call it specialty products. If you end up bringing, I think, the higher amount of specialized product into the marketplace, you may probably be in better position to command the price, and that's where I think you protect your margin. That is what is being looked out for from Indian pharma companies or generic companies. Dr. Reddy has ended up giving the direction that they want to bring out, I think, a sizable amount of portfolio in the marketplace with the new products in 2018-19 or second half of 18 and then 19. So I think that is a clarity which has come up. If I'm Sun, I guess I think couple of products clarity has already emerged. Not too sure I think whether I think too many products they have lined up or something. So we'll have to look out for such kind of data points to buy into the companies. Valuation wise, fortunately they are available attractive today. So I think the argument is that if downside is limited, might as well take that much of risk in buying this company because they hold the potentials.
Okay, Gaurav, just wanted a view on a couple of counters. First of all, Tata Elxsi, which continues to do well. That one is one of them. And secondly, RBL Bank, which over the past few days has seen a lot of traction. Any recommendation on either of these?
Well, for Tata Elxsi, we have already discussed a bit about it. It's already given a good breakout, sort of. One can buy here, but I would not recommend buying in futures. It's already moved up quite a bit. For futures, wait for a dip of at least a percentage points, and then one can buy. For cash, I think one should buy here. One can have a stop loss of 12.55, 12.60 on the upside. 13.50 can be seen. So this is one name that should be on the radar. RBL Bank, yes, as Chandan already pointed out that it's already given a breakout after a couple of days of consolidation. One can buy here, have a stop loss of 5.54 on the upside. Targets of somewhere around 5.75 can be seen.
Okay, a couple of stocks that are buzzing in trade. Pull up Redington and Delta Corp. Both these counters have managed to inch up sizable amount of moves that come in. Redington's up almost 11% now. Delta Corp is the other one which has buzzed up in trade currently. So traction certainly seems to be coming in on any of the counters. Gaurav, any view on either of these stocks, Delta or Redington?
Redington has not been doing too much. We do see it coming out of the woods and showing some upside, but it generally does not hold. I would skip it. I would not be too interested. I think both of the stocks should be avoided. But yes, if somebody wants to say I have a view on one of the pharma names, I think it's just come on my radar. It is Biocon. It has a good breakout about 620. We saw some amount of over-addition also happening here. I think with the stop loss of 616, one can buy Biocon for targets of 635.
Interesting. just looking at stocks, I mean, as Darshan has been saying, Delta Corp is one, and this is despite the news that there might be heightened taxes or license fees for casinos in Goa. Delta Corp continues to move higher, so that is one good mover in trade. Bombay Dyeing has some gains to itself, minor ones at that, but at least has some gains, so do watch out for that one as well. And then it's of course all about pharma and what those pharma names are doing. Deven, Choksey, for somebody who wants to put in fresh money to work into the financial space, and it's now so varied, where would you find favor? Would it be a large private bank? Would it be an NBFC? Would it be a small finance bank? I mean, or would you gamble with a PSU bank? What are you keen on doing right now?
So, Neeraj, if the bank is the only option that is available within the finance space, then certainly I think my continued preference would be to go for the consumer and the housing finance businesses. However, I think they are expensively traded. They have been expensively traded, and they are continue to remaining expensive in this time also. Unless I think you get some kind of a market correction, and at that point of time you end up buying, I think you are buying a little bit at a premium for sure. But if you expand the lookout for the companies within the financial basket, then probably insurance is one sector which convinces me that I think one will probably get multiplier rate of return if one invests, I think currently. The rate of growth in the life insurance segment in particular is remaining reasonably on a higher side. And that is where I think we believe that the better money is to be made in this particular subject. The 25-30% kind of a growth we haven't seen in the insurance business in past, and most of the private sector insurance companies have started working on that engine where they have been producing, when they are producing, I think this rate of growth, which is basically typically a same characteristic of the corporate banks or the private sector banks of 90s when they started this particular growth engine of 30% rate of growth, CAGR growth, which is what insurance companies are promising to do. If you buy this argument, then probably the horizon should be, I think, little longer, but buying into the investment portfolio for long-term purpose, I think would satisfy this insurance company investment or justify insurance company's investment in your portfolio. So we like this space. We believe that currently some of the stocks are slightly priced, but at the same time due to a market correction, they are available at a little lower valuation. So can consider buying them into portfolio with a view of at least 3 years from now.
Okay, Deven. Gaurav, just wanted your view on a couple of these counters. Lupin has managed to inch up 2%, Wockhardt is up 2%, and Granules is also up by another 1.5–2%. So anything on these counters, anything that you like that looks attractive here?
Wockhardt is one that is looking good. It would be a positional trade. One can have a stop loss of 700, 705 on the upside. 760 can be seen. So this is one name that would be on the radar. Granules is another name, but I would buy on dips. Any dip towards 85, 85.5 can be bought. Stop loss of 83 on the upside. Targets of 92, 93 can be seen.
Okay, Deven, any view on the Bajaj twins, Bajaj Finance and Bajaj Finserv, both of them trading near record highs? Are you concerned about the valuation on these two counters, or do you believe that growth is something that you should target at, and they will be able to maintain that consistent growth rate?
So I think again interesting question, and that is where a while back I was making a point in the financial segment about paying the premium to the companies which are growing at a higher rate of growth. In case of Bajaj Finance, which is basically growing consistently at a rate of growth in excess of 30% for last few quarters or decade, for years rather, I feel that this company has a long-term strategy to play out. It has a digital marketing reach, which is basically bringing their customers into. It is using the technology to basically arrive at the risk proposition for the customer to whom they are lending, and they are doing probably some of the right things, as a result of which you develop the confidence that this company would not only garner higher amount of business, but doing the business at a more friendlier pace with their customers. So we continue to hold the position that Bajaj Finance may be premium priced, but it's a good quality stock to hold into and buy during the correction. And second company is Bajaj Finserv, which is basically holding the Bajaj Finance shares, which is holding the Bajaj Life Insurance and Bajaj Non-Life Insurance shares in its portfolio. I was making a point earlier about the life insurance business and the growth that is coming in. Bajaj Allianz Life business is probably the most profitable business in the country today in the insurance space, and that's where again I think the argument goes in favor that one should buy, hold and stay invested. Slightly premium, but because of the inherent qualities of the businesses that they are nurturing into their portfolio. So I would think that correction is the best opportunity to buy when the stocks are traded at premium, and that is where I think the argument would be to buy into Bajaj Finance and Bajaj Finserv during the correction. We continue to hold. That's a disclaimer that I must put across to you.
Okay. Gaurav, Bissa, as well as Deven, Choksey, gentlemen, many thanks for joining in today and giving us your thoughts. Really, really appreciate your time. Well, that's the view from our experts. The market's holding out for now, marginally in the green, about 0.25% for the Nifty Bank and the Sensex. So that's not too bad. The rupee 67.57 has come off a little bit or pulled back a little bit from the kind of levels that it started off with. However, a story that we need to address before we take that break. The government has thrown in a sweetener for the middle income group, hiking the carpet area for houses qualifying under the government's Urban Affordable Housing Scheme, the Pradhan Mantri Awas Yojana. Jayesh Kalyani has the details. Jayesh.
So Neeraj, first and foremost, let's have a look at what changes have been made. The middle income group 1, the carpet area has in fact been increased from 120 square meters to 160 square meters, and the middle income group 2 category, which the carpet area has been increased from about 150 square meter to 200 square meters. Now this will definitely be beneficial for the middle income buyers and the sector in cleaning out the unsold inventory. Also remember that this is the only change that has been made. The subsidy level change has not come about. So if you look at the classification, the middle income group 1, the income slab that is required for that is about 6 lakhs to 12 lakhs per annum, and the MIG 2 requires an income slab of about 12 lakhs to 18 lakhs on an annual basis. Coming to the subsidy front, the MIG 1 category entails a customer for 4% interest subsidy on a loan of maximum of 9 lakh rupees. So this translates to about 2.35 lakh rupees an upfront subsidy, and the MIG 2 category allows a 3% interest rate subsidy on a loan of maximum of 12 lakh rupees. So that translates to about 2.3 lakh rupees as an interest subsidy on an upfront basis. So definitely positive for some of the stocks like Suntech and Kolte Padel and any other player that would be in the affordable housing space.
Depends. I mean, I don't know. Let's wait and watch. We'll probably need to speak to the managements if it is indeed complementing their portfolios or no. Maybe some of the NBFCs might benefit out of this as well. Jayesh, thanks for putting that into perspective. Just before we take that break, Darshan, just a quick word from you on Sun Pharma. The stock is up 3%.
Yeah, so basically a lot of people said it priced in, but sentimentally this news is positive. A lot of approval coming now. Now the management does not say which product is filed from which plant, but all we know it's an injectable plant, so we are assuming that the injectable portfolio is from that. But more than Sun Pharma, look at the other counters which are under the U.S. FDA regulator. Look at Lupin, how it's rallied. Look at how Wockhardt has rallied. Look at how Dr. Reddy's has rallied, and they have rallied much more. So I think tide seems to be turning for the pharma sector. No news, only in terms of just getting the U.S. FDA clearance that will come in, and it's Sun Pharma that's led the rally this time around.
Yep, 3% up today. Let's wait and watch what happens thereof. Okay, we take a break on that note. On the other side of the break, we discuss Bharat Forge's stake buy in a UK-based electric vehicle company with Executive Director Amit Kalyani. And as monsoon brings with a host of diseases, we talk to Velumani of Thyrocare about what this does to their business. Welcome back. You're watching Indian Open on Bloomberg Quint. Bharat Forge is in news for acquiring a 35% stake in Teva Motors. It's not the quantum of the investment, but more importantly, the strategic nature of that. Let's get more details on this acquisition and what it means for Bharat Forge, which Amit Kalyani, the Executive Director at Bharat Forge, Yatin from our research team Johnson, to take that conversation forward. Yatin, over to you.
Thanks for that, Neeraj, and welcome, Mr. Kalyani, and thank you for taking out the time for Bloomberg Quint. Starting with the first question, and if you could tell us, what is the Bharat Forge strategy to approach the electric vehicle segment? In the past also you have done a couple of acquisitions in the segment. Will the acquisition spree continue in the electric vehicle or the electric vehicle auto ancillary segment?
We have a strategy to build the foundation of a electric vehicle supply business. So the first step was to, build a team within and build some capability so that we can then extend this to outside. Then we built a R&D center in the UK, and then we acquired a stake in an Indian two-wheeler company which basically makes the powertrain and the power electronics and the control electronics for the two-wheelers. And the third step was to invest into a company that will supply the powertrain for a commercial vehicle, which is the 7.5 to 14-ton vehicles. So with this, we will cover the Indian market, the global market, and a different range of technologies from light vehicles to heavy vehicles, and allow us to understand the architecture, the supply capability, and the requirements of these products in order to build the supply chain and the product strategy for supplying into these products. So I think as of now, we have, quite a lot on our plate. We're focusing on the power electronics, on the mechanical side, on the lightweighting technologies, and this will be something that will take, a year or two for us to completely understand, build a back end, and create the technology capability to drive this business.
Okay. Amit, I also want to understand that you announced a, £100 million acquisition, which is Teva. And you will be putting in this, 10 million or probably roughly 90 crores for this commitment with, Teva. But will this investment be only to this tune, or moving forward, would you be looking to ramp up the equity investment, or you will be buying additional stake in the company?
Well, right now the fundraise that they had was 10 million or close to 12 million pounds, out of which we have invested 10 million. And I think this is enough for what we have on the horizon for the next 2 years. And, we will see what happens at that point in time.
Mr. Kalyani, I also wanted to understand, was this acquisition only to complete the value chain, since you had something in the two-wheeler space for the electric vehicle segment, and now this one comes in for the commercial vehicle side. So was this to complete the entire value chain? And also, if you could tell us what is the exact strategy now that you have the two-wheeler space and the commercial vehicle space in the electric vehicle segment with you?
Besides, having the complementarity of the commercial vehicle product space, it also gives us access to the European technology market to understand what is happening, and used our R&D facility in the UK, use our aluminum forging facilities and other facilities in Europe, also to develop a supply chain strategy into the European, vehicle market for EVs, and drive the growth further with new products and new solutions out of India. So
okay.
It's a, multi-faceted approach to what we're trying to do.
Okay, got it. And sir, how much long will it take you to start rolling out products from the ventures or the acquisitions that you have made recently?
So I think it will at least take a year, but as we talked about earlier, we've set up this Center for Lightweighting Technology in Andhra Pradesh, where a lot of products that we are focusing on making will be for any product, any vehicle which needs to reduce weight, and a lot of hybrid and electric vehicles are very strongly focused on weight reduction. So that will also be a quick start in terms of production. From the middle of next year, we should be in production and start ramping up. But the products which are more electric powertrain related, etc., will probably start in maybe 18 months or so.
Okay. And Amit, one final question. With these acquisitions, catering to the electric vehicle side, do you think not only electric vehicles but the electronics required by cars powered by oil or fossil fuel, that is also one segment which you will be looking at, or all of these acquisitions only cater to the electric vehicle segment? I just wanted your clarification on this one.
The electronics capability that comes out of these acquisitions is broken up into two areas. One is the control electronics, the embedded systems, the cloud-based systems, which is applicable for any vehicle system, because they're all now becoming increasingly electronics oriented. But the power electronics and the electric mobility largely based for applications on electric vehicles and hybrid vehicles.
Okay, Mr. Kalyani, thank you so much for taking out the time and joining us. All the best for the electric vehicle venture, at least. Neeraj, clearly at this point in time, the management talking about the potential of the electric vehicle segment and how really will they ramp up their investments in that segment. Yeah, should be interesting. I mean, I guess more a complementary move as opposed to something that is immediately earnings accretive, Yatin, I presume. Right. Okay. So that's Bharat Forge, and Yatin, thanks for taking us through that as well. So that's one corporate interaction for the day. Bharat Forge, Amit Kalyani talking to us. As I look at the markets right now, Sun Pharma Advanced Research on the Nifty 200 is making the biggest impact of sorts, 4% higher. Syngene and Biocon have some decent moves today. Both of them have started off well. RBL Bank is on a bit of an uptick, up about 3%. And lo and behold, Interglobe Aviation up about 3% at 1231 or 1232. So that one is starting off on a fairly decent note. Okay, the next conversation and more topical, not just from a perspective of what's happening in the markets and business, but also what's happening to life in general. Monsoon season, and with that comes a sudden spike in contagious diseases, amongst others, prompting patients to head to the laboratories for preventive checks. That's the belief that exists in the market. Somebody who knows this better than anybody else is Dr. Velumani, who's the CEO of Thyrocare. You recently heard him at the Traders Carnival talk about his life journey. Right now we are out here to talk about the life journeys of people and how they get impacted during this particular season, and what it could, in a convoluted way, mean for businesses, for companies such as Thyrocare as well. Dr. Velumani, thank you so much for taking the time out and speaking with us. I mean, is this a pattern? I mean, maybe we've spoken about this in the past, but I don't remember. But is this a pattern that typically in the monsoon season, there is a spike in these diseases? Yes. And therefore, is there a pattern to businesses like yours as well?
Post-monsoon, at least 15 days to 20 days after the beginning of the monsoon, till 1 month post-monsoon, the dengue, chikungunya is on the very high rise. In fact, 75% of the business in these two tests are done only in 4 months. Okay. So that means everybody is prepared with the kits, manufacturer is ready. And sometimes the epidemic goes a bit beyond too much because of some waterlogging and some kind of challenges of local municipal authorities. That cities sell more, other cities sell less, but then this business is sick care, fever related, emergency, you need very fast result. And every hospital is very busy because they keep on getting customers in, they diagnose and they treat.
Does this work out for a company like yours as well? And is this a pan-India problem? I mean, at least where monsoons are strong enough?
The normal laboratories have a very high peak in this season. So let us say they get around 30% more business in this particular 3 months. I get 10% more in that peak.
Why so? I mean, why
because I am known as a preventive care, number one. Number two, I don't report very fast in the daytime itself, and within 2-3 hours. I work in the night and report next day. So very few people have that patience to get the results. So I am actually not focusing there. I am more. I am recognizing me more as a preventive care man. Yeah, sure. Not a sick care man. So that way I am looking at metabolism more, not at the infections more. Okay. So I am a different player, but still I get around 15% raise in this period.
Okay. So the July, August, September quarter need not necessarily be a very strong quarter for you, but there's some upticks that you see. But anyway, right. So that was one part. I mean, I just wanted to start it off with that small thing. Want to come out to the larger business now. FY18 as a year, your reported numbers, compared to what you set as a benchmark and compared to maybe what the street was working on as well, slightly lower. You would be the first one to admit that as well, as I know you've been very candid about this. Was this an aberration, and does it get corrected because you maybe change your business style, more B2B from B2C? What's the way ahead now?
See, the IPO gave me a kind of a different exposure to the market. That's I'm talking to the common man. And we did spend around 40 crore in the IPO year. That's a bit higher side. We fortunately had the outgoing investor who was made to agree for this, and that gave rise to around a 27% growth in the previous year. What was supposed to be 21-22 became 27. Now that extra 6% is putting pressure on the next year numbers,
which is FY18.
So FY18, but I also knew it would be only 20%, but to my surprise it has gone to even a 17% as a growth. We had a better EBITDA, we didn't dilute it. In this business, the minute you want more growth, you need to dilute the EBITDA, and as a player in the entire industry, probably in the entire world, in healthcare, I have the highest EBITDA. So I should be diluting that 2-3% this year, so that I get some 7-8% growth next year.
Okay. We'll talk about that as well, but what shape and form would this dilution of EBITDA be? Would it be you reducing prices, because you are known amongst the people who brought about this low price facilities available for customers? So would you reduce prices lower, or would you step up your advertisement and promotional activities, which I think you stepped back a bit in the second half of FY18, if not wrong?
See, my basket has some which are low profit profiles and high profit profiles. Obviously, competition has done some intense research. They've identified where this man is making more money, and they have all cornered it. See, let's look at business. Everybody is supposed to do research and find out how to price and how to grow. So around 10% of my profiles had a high profit. I'm going to dilute them this year. So overall, it will look that I am losing 2-3% of the revenue, but then I know where to plug, and I have plugged them. There is a likelihood I have plugged them well, or there is a likelihood I have to plug it more, but then I have done some dilution in rates.
So what impact could that have on your EBITDA from what it was at the end of FY18?
I think Q1 will not have a better EBITDA and better growth, because once you dilute the rate, the top line also shrinks.
Okay.
So I think this Q1 I am not expecting any miracle.
We're not looking at quarter.
But by the year ends, it should be giving, if last year we closed at 17, this year it should be 5% more other than 17 plus 5.
Okay,
20.
but that's the top line. What about the EBITDA?
EBITDA will not suffer. I have noticed one thing. Whenever I have reduced my rate, the percentage EBITDA goes down, but the absolute EBITDA goes up.
Interesting. So please correct me if I'm wrong, but there's this I think a BNK conference that you probably attended, and their note seems to suggest that you've guided to an EBITDA dilution of roughly 500 basis points YOY. Is that incorrect?
Actually, I didn't attend. One of my manager attended.
Okay.
I have no clarity on how he has communicated.
Okay.
But I think we intend to dilute an EBITDA by 2-3% and bargain a 7-8% top line extra.
Yeah, but you're also saying that there is a chance that the EBITDA dilution may not happen, because while you're guiding for it, higher business may bring back the EBITDA as well.
Percentage EBITDA would be going down, absolute EBITDA will be going up.
Yeah, but percentage EBITDA would correct by 200 to 300 basis points.
Yes.
Okay, fair call. So that is one. I remember our conversations when you came out with the IPO, Dr. Velumani, and you used to mention that, investors may want to look at my business on a YOY basis, but if you look at your business over 5 years, you believe that the CAGR numbers would be about 25%. Your first answer when you said that the first year you did 27% and then you've done 17% means a CAGR of about 20-21%. Are we to assume that from the time of listing, 5 years onwards, which is the next 3 years, combined, you would have a CAGR of about 20-25%?
I think minimum should be 20, maximum should be 25.
Okay.
And the industry is highly, I would call as disrupted. With a lot of new players have come in. A lot of people have understood what is pricing. Earlier people were wrongly pricing. People also have understood what is B2B and B2C. People also have understood where volume comes, where value comes. So with all said and done, what I was doing was some guesswork and I was right. Now people know that what is right, and people are more or less easily calculating. So if I grow 20% CAGR, I should celebrate, because the industry grows around 15-17%. But I have a reason to believe I should be able to pick up this year and do around 23-24 CAGR for another 3-4 years.
Okay. One small question also, about a year back or year and a half back, you were talking about how you were buying a set of new machines in order to set yourself up for the next leg of growth after the diagnostics, pure diagnostics business, kind of matures and hits a bit of a plateau of sorts. Where are you on that?
No, in the laboratory segment, we don't sense a plateau, truly plateau, but if a CAGR matches with that of the industry, that means plateau.
Okay.
So I believe it's around 3-4 years, it should be doing much better than industry. Having said that, we have invested in radiology, and radiology is supposed to help me to continue to grow the business profits as well as top line from the year 2022.
Okay.
Until that time, it is a lot of investments are going in.
Okay.
So I have a reason to believe my radiology would take over the driving of the top line and profitability both after 2022.
Okay. And one last question, Dr. Velumani. In the interim period, would you need to raise any kind of funds to fund this expansion?
I think the company throws out 100 crores of almost PAT. With that in hand, I don't think I need any more funds. And in fact, we declare a 50% dividend because we do have very little requirement. I have a reason to believe for another 4 years, 5 years, we would not be looking at any fundraising, either debt or equity.
Interesting. Great. Good having you today. Thank you so much for taking the time. And it was a pleasure listening to you at the Traders Carnival as well.
Thank you. Bye.
Okay. And viewers, thanks for tuning in. The markets have flattened out completely, I must say. But wrap it up on this leg of Indian Open. Up next is the F&O show. Stay tuned.